Right now, I want to talk about a bigger picture here. The global economy is in a multi-speed recovery as advanced nations grow much more slowly than emerging markets. Joining me now from Stanford Institute for Economic Policy Research is John Lipsky. He is first Deputy Managing Director of the International Monetary Fund. John, welcome to Street Smart. Thanks for joining us. Let me ask you a question that really the IMF has been the subject of so much talk lately because of the situation in Greece. Can they get help from the IMF? Would the EU or the ECB have a problem with that? Why don't you tell me right now what you're expecting the IMF could do to help Greece?
Well, as you probably are aware, the Greek authorities have requested technical assistance from the International Monetary Fund. Greece is a full member of the Monetary Fund and has the same rights and privileges of any member. We work in a cooperative way. If they were to ask more help, we would be providing it. However, as you're probably also aware, the Greek authorities, the new Greek authorities, have put together a stability program that they have submitted to their partners in the European Union, and that has received the approval of the so-called European Council. And they are working with their European co-members of the European Union to implement and define support for their program. We're working with them to make that a success.
What does that mean as far as providing actual cash here, John? I mean, will the IMF be providing monetary assistance to Greece?
At this point, the Greek authorities have not requested financial assistance. There have been indications from them and the European authorities that for now, for sure, they don't intend to seek financial assistance from the IMF, but rather technical assistance and support.
You know, there's been talk about creating the European equivalent to the IMF. Is that an idea that you think should gain traction here because of the difficulties of so many different organizations working with Greece, even though it's already sort of in the confines of the EU?
Well, first of all, we haven't seen any detailed proposals for such a fund. And, of course, in the context of the euro area, a monetary fund and it's not clear what that concept would be. The euro area has a central bank, the European Central Bank, so the fund may be a budgetary fund and may be more like a governmental or a fiscal budgetary agency rather than a monetary agency.
All right, let's back away, or I guess zoom out a little bit, take a bigger picture look at the world here. The global economy, Secretary Geithner earlier this morning said should grow at about 4% this year. Is this an estimate that you agree with? Does it match up to your expectations?
We're going to be issuing our updated global forecasts in the coming month. And we do think that there is going to be a moderate recovery that's it suggests that of the large advanced economies, the U.S. is going to be one of the strongest growing. The euro area, Japan, growing at a somewhat slower pace. We're hopeful that we will see a sustained recovery that will increasingly be fueled by growing private demand and weaning away from the public sector support, the budgetary support that's been so crucial in beginning this recovery.
What about emerging market growth? I mean, do you see stronger growth there continuing? Do you think that analysts have overestimated what we should expect to see from emerging markets?
No, we think that emerging markets will continue to grow strongly. Specifically, we anticipate growth around 10% in China, 8% in India, 7% in Asia as a whole, and 6% globally for emerging market economies. Of course, over the past year, many of them, like China, like India, have also supplied substantial budgetary support and other policy support for their expansions. So there, too, an issue for sustaining the recovery into the future will be to rekindle domestic demand growth in the private sector. We're confident that there's a good chance that's what's going to happen.
John, are we starting to see anywhere in the globe? I mean, we've seen some liquidity pulled out of the system. We've seen some quantitative easing reversed. Are you starting to see any examples of recoveries sustaining themselves after government assistance is taken away, or at least as they start to get weaned off of it?
Oh yes, and we've seen this in a few cases where the economy seemed to warrant, the conditions seem to warrant it. There's already been some beginning of a reversal of the stimulus policies that supported the economy, such as in India and in Australia, where the central banks have raised interest rates at least somewhat. Most important is that the governments around the world, especially in the advanced economies that have applied substantial amounts of budgetary support for their economies, lay out a clear course for a return to sustainable budgetary policies to begin to be put in place once there are clearer signs of a rekindling of sustainable private demand.
Let me change gears here slightly. You think it's important for financial regulatory reform to happen globally. What is your confidence that that will happen sufficiently?
Well, there is certainly a very clear-cut political will to reach agreement on internationally coherent and cooperative regulatory reforms. And we're quite hopeful and confident that progress is going to be made. We would add a couple other points. One of importance, it's clear that regulations can and should be improved. It's also very important that the quality and political support for supervisory agencies be strengthened. You can see from reading the reports and understanding how the financial crisis unfolded that certainly better regulation would have been important and useful, but also better supervision would have been an important aid.